Hello everyone, and welcome to today's global market update. Despite rising tensions in the Middle East, the UK stock market showed signs of stability on Wednesday. However, oil and gas prices continued to surge amid growing fears that the US-Israel conflict with Iran could drag on for an extended period. Let's break it down. UK and European markets rise. In London, the FTSE 100 closed up by 0.65%, recovering some ground after recent volatility. Markets in Germany and France also posted gains, suggesting investors in Europe remain cautiously optimistic. However, the situation was very different in Asia. South Korea's benchmark index fell sharply, triggering a so-called circuit breaker after dropping more than 8%. By the end of trading, the Kospi closed down 12%, one of its worst days in decades. Japan's Nikkei 225 fell 3.6%, while Hong Kong's Hang Seng Index dropped 2.5%. Asian markets have been hit particularly hard because the region depends heavily on energy imports from the Middle East. Oil prices surged. Oil prices rose more than 1%, reaching around $83.50 per barrel. Since the United States and Israel began bombing Iran over the weekend, Brent crude prices have jumped by roughly 15%. The increase follows reports of a drone attack targeting Saudi Arabia's Ras Tanura oil refinery, the second attempt this week. Energy markets are especially concerned about disruptions in the Strait of Hormuz, one of the world's most important oil transit routes. About 20% of global oil and gas shipments normally pass through this narrow waterway between Iran and the United Arab Emirates. But following Iranian threats to attack shipping, traffic through the strait has nearly halted. On Wednesday, the UK Maritime Operations Centre reported that a vessel was struck by an unknown projectile in the strait, causing a fire in its engine room. Another ship was also hit near the UAE, and investigations are ongoing. According to Lloyd's List Intelligence, around 200 tankers are effectively stranded, while insurance costs have surged, especially for American, British, and Israeli-linked vessels. Gas markets volatile. The energy shock is not limited to oil. State-run QatarEnergy has suspended production of liquefied natural gas, or LNG. Qatar is one of the world's largest LNG exporters, and about 80% of its shipments go to Asian markets. Gas prices in the UK have remained volatile, trading around 127 pence per therm, below Tuesday's peak of 170 pence, but still elevated. Analysts say Asian buyers are now competing aggressively for alternative LNG cargoes, pushing prices higher globally. US Trump's insurance promise. US President Donald Trump said the United States would offer risk insurance at a very reasonable price and could use the Navy to escort oil tankers if necessary. However, experts warn that this may not be enough to restore confidence. Some analysts say shipping companies, insurers, and crew members may still hesitate to operate in such a high-risk zone. Many believe the only real solution is a diplomatic agreement, but that currently appears unlikely. Economic impact on the UK. US Treasury Secretary Scott Bessent stated that crude oil markets remain very well supplied, though further announcements are expected. In the UK, Chancellor Rachel Reeves is meeting North Sea energy executives to discuss how to manage this uncertain period. Economists warn that if oil and gas prices remain high, inflation in the UK could rise. David Miles from the Office for Budget Responsibility said that if energy prices stay at current levels, the impact on UK prices could be around 1%. However, he stressed that the situation is not as severe as the energy shock seen after Russia's invasion of Ukraine. Still, rising inflation could affect interest rate decisions. Markets had expected the Bank of England to cut interest rates twice this year, but higher energy prices may force policymakers to delay those cuts. The Bank of England is set to announce its next interest rate decision on March 19th. What happens next? The big question now is how long will this disruption last? Oil reserves held by the US and China may help ease short-term supply pressure, but if the conflict continues and shipping remains blocked, the global economic impact could grow. For now, European markets remain relatively stable. Asian markets are under heavy pressure. Oil prices are rising and gas markets are volatile, and inflation risks are increasing. Investors are watching closely. The coming days will be critical in determining whether energy supplies stabilize or whether the conflict pushes the global economy into a deeper crisis. We will continue to monitor developments. Thank you for watching and stay tuned for more updates.